Because of the bravery and sacrifices of veterans and active military, the rest of the country's civilians can live the American dream safely. As one tangible way to say thank you for your service, current and former members of the military have access to Veteran Affairs home loans. These unique mortgages allow veterans and those who are still serving to own a piece of the American dream by potentially qualifying for homes that they might have thought were out of reach. Veterans, active duty service personnel, and select reservists or National Guard members are amongst those who can qualify for VA loans. Are you wondering what some of the benefits of a VA loan might be? Well, here are 5 to consider. The first thing to talk about is no down payment. This is one of the most valuable and touted benefits, and for good reason. Saving enough for a down payment can be the biggest obstacle to buying a home, but a VA loan eliminates that obstacle. There's a lot of buyers out there that don't have the extra resources available, so the fact that they can purchase a home with 0 down payment makes the transaction much more feasible. In addition to that, there's a lot of people out there that would prefer to make 0 down payment on the home, even if they have the extra cash, simply because they can invest that into the market and earn more on that in comparison to the low interest rates today. In most parts of the country, qualified buyers can purchase up to $425,000 before factoring any kind of down payment. In pricier areas, borrowers can actually go beyond that threshold and buy a more expensive home with no down payment. But beware, the no money down aspect of a VA loan shouldn't be confused with no money out of pocket. That's a common misconception. A VA loan still requires closing costs and an earnest money deposit, which is a negotiated amount of money that the buyer puts in escrow to essentially hold the house. However, that money will often come back to the buyer at closing when the title company will write a check to the veteran on the spot for the total amount that was put into escrow. The second benefit is the requirements for the loan are a lot more lenient. The required credit score for a VA loan can be lower than a conventional loan, around 620 for a VA loan as compared to a range of 650 to 700 for most conventional loans. In addition, the required debt to income ratio for a VA loan is a lot more flexible than a conventional mortgage. It allows someone with less than perfect credit and some debt still be able to qualify for a loan. The third benefit is there's no mortgage insurance. Most conventional buyers have to pay private mortgage insurance if they put down less than 20% down payment. FHA loans come with their own form of mortgage insurance, but a VA loan waives all of that insurance requirements. And trust us, this one is important because that can add a lot to your monthly payment. This could be big savings since PMI typically runs about $200 a month. That's $2,400 per year. Even though there's no mortgage insurance, there is a funding fee, which is an upfront cost applied to every purchase loan or refinance with VA. The proceeds help the VA cover losses on a few loans that go into default, but borrowers can roll that into their monthly payment or pay it all at once. Plus, it's tax deductible, and veterans with a service-connected disability don't have to pay that funding fee at all. Also, we can negotiate for the seller of the home you're buying to pay that fee for you. So the fourth benefit is limited closing costs. Legally, veterans are allowed to pay for certain closing costs, which include for appraisal, credit report, origination fee, recording fees, survey, and title insurance. But there are some fees that veterans are not allowed to pay for, and the VA allows lenders to charge no more than 1% to cover the costs of originating and underwriting the loan. So for example, if the purchase price is $280,000, the veteran might offer $300,000 and ask for 3% cash back to cover all the closing costs. This way, the veteran is essentially financing their closing costs into the loan, meaning less out of pocket at the start. The fifth thing is extra assistance with appraisals. When a home that a veteran is considering purchasing is having trouble reaching the purchase price during the appraisal process, buyers and lenders can ask the VA appraiser to consider adjusting the evaluation before making a final determination. Appraisers notify the lenders in the event that the appraised value is likely to come in low, giving buyers and real estate agents 48 hours to supply additional information that the appraiser might not be aware of to help justify the value of the purchase price. Typically, I assemble an itemized list of upgrades and improvements that the seller has performed on the home in the past few years and that the appraiser potentially didn't know about, and therefore didn't include them in the home value report. This process gives the agents the opportunity to assist the appraiser in making sure that they have the whole picture of the home, and gives the local agent an opportunity to give the appraiser an educated, specific local value. It's just another benefit of VA loans aimed at helping our servicemen and women buy their home of their dreams. For more smart financial news and advice, please be sure to reach out to us, because we can help you with other kinds of loans that are out there that may benefit you, in addition to giving you more information on a VA loan. Thanks for watching.